Good afternoon. Welcome to GrainTV. It's September 3rd, 2014. I'm Logan Burgess. To my right here is Cody Bills to help break down a very negative day for the grains in Chicago. Take a look here at the quotes here on the iPad. We see corn down 11 3/4 for December. Soybeans off 12 cents in Chicago. Wheat for the December contract down 19 1/4. As we know, yesterday after the market closed, we had sharp improvements for soybean conditions, up 2% here on the week. Now 72%. Rated good to excellent. This is the best rating for the fourth week in August we have ever seen for the soybean crop, surpassing the excellent crop in 1992. That was the previous record for this week. So as we said yesterday on the show, we thought this would weigh on the market a little bit in the overnight session. Corn looked pretty good as well in terms of conditions there, Cody. And let's focus on this corn market here. Technically not a very good day for the corn market. What were you looking at here? Was it crop progress numbers? Was it strength out of the dollar? Was it the USDA report? What was kind of pushing things?
I think it really is that kind of that crop progress report, the fact that we continue to improve. Now, I think it's a little bit of crop progress report coupled with the fact that on September 11th, we're going to have a USDA supply and demand report. This crop progress report really kind of it kind of shows that we're going to see we're likely to see an improved yield forecast out of the USDA. I think what we're seeing here is traders starting to forecast in or factor in a higher yield for corn. I mean, we just saw yesterday FC Stone, they raised their final yield estimates here for corn to 174.1 bushels from 172.4 bushels. Now, you know, that may be a little high. I don't anticipate the USDA coming out even nearly around that estimate, but what it shows is that traders are expecting USDA to raise their yield forecast for both corn and for soybeans. That's weighing on the market here today. I think traders are really kind of positioning themselves for the report next week.
You know, Cody, as you're looking at this December corn market right now, it's certainly been getting a lot of calls into the office. Some producers feel right now they're undersold, especially after the big run that we've seen. For somebody right now that may be a little bit undersold on this new crop, and in light of this technical move lower, what are some things that you're going to be looking at or kind of keeping in the back of your mind here as we approach that September 11th USDA report?
Well, I don't think this is necessarily as low as we could go, so I think there's always some downside risk, and with downside risk, you really should be looking to protect yourself. But when we look at today's price action, I mean, we fell through the support level of 358. Now, we fell through that. I think there's a good chance when you look at the long-term monthly chart here, you'll notice that the lows that we put back in 2009, those are around $3. I wouldn't be surprised if we move back around that 320, maybe even to $3. The bottom line here is that I think there's a good chance we continue to trade lower into that September USDA supply and demand report. If you're a producer here and you are comfortable right now, you don't necessarily need to put more hedges on, but you wouldn't mind getting in if the market made a little bit of a bounce here. Oftentimes when you fall through those support levels, you may pause and then come back up, retesting what was support, now turning into resistance. That sometimes is a good area to hang kind of a sell order, sell limit order in, and potentially pick up a better price than what you'd get at the close of today's session.
Yeah, you know, Cody, looking at the soybean market here in today's trade, really kind of a similar story to what we saw in corn. Yesterday, soybeans showing relative strength. Today, this market gave back nearly all of the gains that we found yesterday. And if you take a look here at a weekly chart, we're now testing long-term support, which we've talked about quite a bit here on GrainTV since the August 30th USDA report. In my opinion, this November contract is going to test $10. Not helping out in today's action was a report out from Landworth projecting 98 million tons of soybeans out of Brazil in the new crop. That's about 8 million tons higher than what the USDA projected in September. So that is substantial in terms of demand. When we're looking at demand in the second half of the marketing year, we do have some concern in this market right now about disease, specifically SDS. But at the moment, the market doesn't seem to be buying on that. That seems to be something that's going to be better quantified as we get into harvest, or if it ramps up in terms of spreading across the grain belt. Right now, it doesn't seem like a factor that's really getting the soybean bulls too excited. That's something to keep in the back of your mind, but I would not rely on that to prop up this bean market as we approach the September 11th USDA report. Similar with corn, Cody, I think this bean market still has downside. It may not be a bad report to get a put in front of. It's already come down quite a bit, but when you look at longer term charts on soybeans, we see long-term support in the mid $9 range when we have stocks like we saw projected in the August report. So just keep that in mind. If you have any questions about that or your general grain marketing here for the upcoming year, feel free to call our office. Number is 877-472-4607. Thanks a lot for joining us here on a Wednesday. We'll see you back here tomorrow.